Well, good morning.
Good morning.
It is October the 27th. Before we know it, October's going to be gone, and we're going to be talking about Thanksgiving. Don't forget the little trick-or-treaters on Monday, and Halloween's coming up, and this is E.J. O'Keefe, but you knew that. He's been with us so many good times, and he's doing such a good job here at HMC. Our buddy, partner, friend, confidant Gibb is traveling, needed to go to Memphis to help his mom on some issues, and he's traveling back today. He'll be back with us. One thing to mention, anytime that either Gibb or I are out, or EJ is out, or Liz is out, our office is in constant contact with one another. We have technology that allows us to go take care of other things, but we know exactly what's going on. We mentioned we were in email contact yesterday. Mm-hmm. So if either one of us are out or EJs are out and you need to get in touch with somebody, you call our office, and our office will get in touch with us, and we'll be glad to help you any way we can, and we'll follow up with you. So we got technology to keep things always moving. This morning, we had a third quarter number come in.
We did. We had third quarter GDP come in, and it beat expectations. Expectations were at a 2.3% increase, and we were at 2.6. So that is good for the overall economy. We talked about it on the radio show this morning. The Fed meets here in a week, November 1st and 2nd, with unemployment numbers still historically low. That GDP number coming in over expectations. We don't see the Fed pivoting or backing off their stance and their battle against inflation with what we presume will be a 75-point hike November 1st and 2nd in those meetings and that announcement.
The inflation is the target of what the Federal Reserve is going to do, and the increase of interest rates till they begin to see that roll over. I think that's the focus that we need to be continued on. We are having discussions about that good GDP report that came in for the third quarter, and then the midterm elections. It's coming a couple of weeks ahead. And we're contemplating if there is a change in power or a stalemate that might occur if Republicans win enough seats that they get both the House and Senate, and President Biden is the Democrat, or if we have a divided House and Senate and things just can't get done. It's frustrating to you and me as citizens of the United States. Nothing gets done, but when nothing gets done, the stock market likes it.
Wall Street likes that. Wall Street likes that nothing gets done because they know what to plan for and what to expect.
So there might be opportunities to dip a little bit into the equity market for a fourth quarter run up. We're contemplating it. We're talking about it. We have cash on the sideline within accounts to take care of that, but we have not made decisions yet. What we continue to see is with the rise of interest rates, the 4% yield is now the standard floor in the 3 months, 6 months, 9 months, and a year Treasury bills. We can go higher if it's in corporate, and if you want to do investment grade questions or work, you can even go higher there. Mm-hmm. So we would not be surprised, don't know this to be the case, but would not be surprised if in the upper fours, maybe a touch to a 5 spot might be something that we would see in the near future with the raise of the next 75 basis points increase. So we are, EJ and I talked about it, as we look at your accounts, I feel like we're overall, and Gibb would say this, EJ and Liz have commented, we're in overall good position. We have just enough equities to take advantage of the days that are up. Mm-hmm. We have cash that's coming in, and it's maturing in November and in February and in the first of the year. We have more cash that we're still buying the higher rates that we're talking about. and we have cash that we could buy into the market if we wanted to tip our toe into it. So I feel we're in good position at this point in time. We talk with a lot of you on a regular basis. You should call us and ask us questions, have a meeting with us, have a Zoom with us, set up a time to do it. But we feel good at this point in time, and I would say it's steady as you go, and we continue to look at the economic data as it's being presented to us, and then we adjust accordingly as we think, knowing that we know it is your money.
And your money matters.
Gib will be back with us. Safe travels. We're glad for you, and take care. And if you're going out trick-or-treating, have fun.